Hi, everyone. Good afternoon and welcome. Thank you for joining us today. On behalf of HLB HAMT, we are delighted to have you with us. And at HLB HAMT Chartered Accountants, we work closely with businesses across the region to help them navigate regulatory requirements, improve performance, and unlock value through practical strategic solutions. So today's session is focused on helping organizations understand the true cost of each ICV point and why many companies end up spending more than necessary. We'll be sharing like a much more smarter, structured approach to maximizing your ICV score while keeping incremental costs to a minimum, helping organizations make more informed investment decisions and achieve better outcomes. So we'll be beginning our session, during which we'll also be having, running few interactive polls. So I request all of you to like gather your insights. So via the polls, we can actually gather your insights and perspectives. So that's one thing. And following the presentation, we also have a question answer session. And towards the end of the session, we also are would like to share that we have a very special opportunity waiting, for everyone who's present in the session. So we will have to know it towards the end of the session. And so we encourage more participation in polls and question answer session and to submit your questions via the chat box, and we'll address it towards the end of the session. So I think we can commence the session, and I'm pleased to introduce our speakers for today's webinar. First, we have Mr. Gireesh Kumar, our partner for Audit and Assurance, who brings extensive experience advising organizations across a wide range of industries on financial, operational, and strategic matters. And we have joining him is Ms. Serin Thomas, who leads our ICV practice and works closely with clients on ICV strategy and implementation. So, which is basically helping businesses identify opportunities to enhance their scores efficiently and sustainably. So, we're fortunate to have both speakers with us today to share their insights and practical experience. So, without any further ado, I hand over to Mr. Gireesh Kumar to begin today's session. Thank you.
Yeah, thank you, Trisa, for wonderful introduction. Good afternoon, everyone, and thank you for joining us today for this webinar. Today's topic is extremely important one, and we believe that this is a rarely discussed topic among the companies in UAE. The most companies know their ICV score. Many of you know whether the score went up or down. Many of you may be comparing the last year ICV score with your current year ICV score. But very few companies can answer a much more important question: what did it cost us to achieve each additional ICV point? This is exactly what we will explore today, the unit economics of an ICV point. By the end of this session, you should be able to look at your ICV score in your ICV certificates, and not as a compliance number, but as an investment return metric. Serin, can you move the slide, please? Yeah. What we will leave today. Let me start with the promise of today's session. We want to leave with 3 practical insights. First, you will understand the approximate cost of each ICV level and how much value each one generates. We will discuss on a level by level breakdown of the cost of every ICV point in your certificate. Second one, you will understand why many companies spend significantly more money than necessary when trying to improve their ICV score. in many cases, we noticed that the companies are funding the most expensive lever first, and they are leaving some cheapest point without claiming their score on that. And the third one, you will learn a practical framework for prioritizing your efforts so that every dirham spent on ICV generate the maximum possible return. So our goal is not simply to increase the score. Our goal is actually to increase the score efficiently. Okay, Serin. So why this discussion become more important now? Because ICV is no longer confined to a few government tenders. Maybe many of you maybe remember actually that the ICV certification process initially started by ADNOC, and that time this ICV is applicable only for those suppliers included in the supply chain of ADNOC. Later, this program took over by MOYAT, that means the Ministry of Industries and Advanced Technology, and they made it as national ICV. Today, more than 31 government and semi-government entities are there as ICV participating entities, and they incorporate ICV consideration into their procurement decisions. The major organizations like ADNOC, Mubadala, Aldar, ENAC, and the various government-linked entities have integrated ICV into their supplier evaluation process. So most of the companies in UAE may be part of this supply chain, either directly or indirectly. Even though you are appearing as the last ring of that chain, there is an impact of ICV certification for the supplier selection of your customers. So while your customers are selecting their suppliers, they are checking your ICV scores. So there is an impact for that. So we are also seeing the continued investments under ADNOC's multi-layer capital programs for year 26 to 2030, and their budget is approximately 551 billion for this period. And out of this, 220 billion we are expecting they are explicitly channeled into the UAE economy through via ICV criteria. Moreover, this Moyat actually they are in process of upgrading their portal with the new digital changes and transparency for the ICV reporting. At the same time, the Emiratization expectation continue to grow. The government of UAE instructing us to fulfill the Emiratization requirement of Moharem. I know that actually you all are maybe getting notification from Moharem on this. So in fact, the fact is that apart from the direct penalties of non-compliances of Emiratization, we are losing our ICV score as well if you are not in compliance with Emiratization policies of the government. So what this means for the management team is simple. ICV is no longer a certification exercise. It has become a commercial requirement now. The companies that understand how to optimize their score efficiently will enjoy a competitive advantage in bidding and procurement opportunities of UAE. Serin? Most organizations approach ICV as a compliance mindset. That is my experience actually, because most of them are thinking that this is a compliance requirement, or it is their mindset is like that. The question always we are facing is how do we get a certificate? But the more useful question is what does one ICV point cost us? Think it that way. Okay, think about In this way, for example, a company spent 5 million dirhams and they gain 3 points in their score, additional points. While another company spent, that means company B, you can say company B, they are spending nothing additional and they are gaining the same 3 points additionally this year. So which company managed ICV better? The answer is obvious, but the ICV is fundamentally I can say, a resource allocation problem. Like any financial decision, we should evaluate it based on the return on investment. That shift in thinking is the foundation for everything we discussing today. At this point, I'm handing over the platform to Ms. Serin, and she will explain further how we can do the optimization and process change to enhance the ICV score. Over to you, Serin.
Thank you, Mr. Gireesh. Good afternoon, everyone, and once again, thank you for joining us this afternoon. So in case there are some of you who are not already very familiar with the ICV program, let me just take a couple of minutes to give you a brief about the program first. So In-Country Value Program, or ICV as we call it, is governed by the Ministry of Industry and Advanced Technology, MIAT. They are aimed at promoting local spending and investment to support UAE businesses and boost economic growth. Now, this certification is done by certifying bodies like HLB HAMT Chartered Accountants, who are appointed by the ministry. And the basic eligibility to have to enter into the certification is to have standalone audited financial statements. And in case you are less than 9 months from incorporation, internal management accounts will suffice. So the ICV score is stated on a system-generated ICV certificate, and it reflects the total amounts that are spent on local products and services and hiring on investments and hiring and development of Emiratis. So basically, ICV is about how much of your business value stays inside the UAE. Now, this here I would like to break it down. So this is the anatomy of your ICV score. Now, this would be familiar to those of you who are already ICV certified. But for others who are not, I will give a high-level explanation to help understand how the ICV score is derived. Okay, so the first, as you can see, the first and the most important contributor to your score is the third-party spend or manufacturing cost. You can see that 50% out of the total score is derived from this component. And this is calculated based on the goods and services procured within the country, along with the contribution from expat and Emirati cost. Then you have investments. Under investments, it covers fixed assets, including property, plant and equipment, capital work in progress, and investment property, which is owned by the company and placed in UAE. Here you get 10% basic score and up to 15% progressively for a net book value of assets above 85 million. Coming to Emiratization, you can gain up to 15% score here, 2% for up to 200,000 salaries, training or other benefits paid to Emiratis, and 2 to 15% progressively for salaries, training and other benefits above 200,000. Now, to keep in mind, for mainland companies, the salaries should be paid through WPS to qualify for ICV scoring. Coming to expat contribution, this contributes to 10%, up to 10% out of the total ICV score. Again, for mainland companies, salaries should be paid through WPS to be able to qualify for ICV scoring. Here, you're given a score based on the headcount, and there is a contribution towards third-party spend also. Next is the ICV bonus. This covers 3 things: export revenue, Emirati headcount, and investment growth. By investment growth, we mean a growth in the net book value of the investments compared to the previous year. And the last component of the ICV scoring is advanced technology and sustainability bonus. Here, for companies who have an industry license, they can gain up to 6%. And for other service providers or companies with a commercial license, they can gain up to 3% through ISO certifications, ITTI certifications, and sustainability policies. So this is the breakdown of the ICV score, and all these components factor together to arrive at your final ICV score. Now, we are curious to know where you are spending the most as of now, currently, with the intention of improving your score. So to quickly check on this, I would request all of you to participate in this poll. Kindly scan the QR code that you can see on the screen and input your responses. So the question is, where are you spending most to lift your score today? It can be new capex or asset purchases, maybe local procurement contracts, or are you focusing on Emirati hiring programs, or is it that as of now you are not actively managing ICV? I hope the QR code that is on the screen is accessible to all of you. Kindly scan it and put in your votes. Local procurement, Emirati hiring, or not actively managing. So I think based on the feedback that we are getting, we can see that it is mostly either capex or not actively managing it that is being polled in. Yes, we have received votes against local procurement also, but mostly the majority of votes we have received is new capex or asset purchase and not actively managing it. And I would say both tell the same story, that there is a big opportunity that is being missed. And that is exactly where we intend to help you through this webinar. Now, moving on, based on the score composition that we saw, these are the 6 levers that you can pull to improve or to optimize your score, or these are the 6 ways that you can do it. Now, the first one is optimizing your local spend. That is shifting your procurement, or rather restructuring your procurement or purchase from non-ICV suppliers to suppliers having a high ICV score, because that will help in your ICV scoring. And that is one of the most immediate actions that you can take. Another lever is deploying capital in the UAE. Here we are speaking about increasing your assets base. So because regarding investments, you get a basic 10% if you have fixed assets within the UAE. And then there is a growth bonus, which we discussed earlier as part of the ICV bonus, where if your net book value has increased, then you can get a bonus of up to 5%. And over this, there is an investment top-up of up to 15% if your net book value is greater than 5 million. So that is why this is a lever. However, this action needs to be taken strategically and not as your first resort. And we'll be coming to that shortly to get into that in more detail. Next lever would be driving your Emiratization. So to understand this, why Emiratization is important for score improvement, let me explain how you score here. Okay, so your total Emiratization cost, it contributes to your third-party spend, plus you get a 2 to 15% under the Emiratization tab, and also there is a bonus included in the ICV bonus based on the number of Emiratis in your company. So, and moreover, like Mr. Gireesh was explaining earlier, this is a legal mandate for all of us in the UAE. Hence, driving Emiratization is an obvious lever for score improvement. Next would be structuring expat cost. Now here we are referring to the workforce consisting of expatriates. So here the score is driven by headcount, and also 60% of your expat cost is considered or contributes to your third-party spend score as well. Maximizing bonus components, as we discussed earlier, you get a bonus from export revenue, Emirati headcount, and investment growth. So the new factor that has come in here is export revenue. So if you are generating income from outside the country by exporting goods or services with a value addition, then you are entitled to this export revenue to be included in the ICV bonus. And also, like discussed, from Emirati headcount and investments, you get a bonus. And the last one is the sustainability and technology. So here, what could help you here is ISO certifications, specifically ISOs 14001, 14046, or 50001. So having any of this would help you with 1% score. Also, there is another certification called ITTI, that is Industrial Technology Transformation Index. It is certification by the MOIAT, which is applicable to companies having an industrial license, which again contributes to this bonus. Coming to companies having a commercial license, if you have sustainability policies in place, you can claim up to 2% here. Now, when I say sustainability policies, it's not just having the policies. Policies should be framed, implemented, and monitored. And you should be maintaining the required documentation for all of this. And then you will be able to claim up to 2% here for different sustainability policies. So these are the different levers that you could pull. Now, on paper, all of them look kind of equal, but in reality, they are not, because not all ICV points cost the same. Some of these levers will give you points almost for free, whereas others would require a huge cost. And since many companies don't realize this, it leads to a lot of unnecessary spending. Here is an example we'd like to put across to show what we really mean. So we are comparing two companies that used two different levers to improve their scope. Okay, so it's like cost of an ICV point bought through CapEx or new machinery versus cost of an ICV point captured by recoding the existing Emirati payroll or maybe rerouting a spend that you already have. So it's a comparison between two random levers that two different companies are using. First is investments. The first company chooses to invest in machinery to improve their ICV score. So though mentioned before, I'll just repeat the investment score calculation once more so it's clear here. For investments or fixed assets, you get a straight 10% for the net book value of the assets in UAE. And there is a bonus of up to 5% for growth. And you can get a top up of up to 15% if your net book value is more than 5 million. So this company chooses to spend 500,000 on investments to improve their scope. Whereas the other company, they are planning to reroute their existing payroll. Means they already have Emiratis in the company. Salaries are paid to them through WBS, but probably it was not segregated and identified for ICV purpose. Hence, earlier they could not claim the scope for that, and now they are doing that. Or it could be that they are rerouting a particular expense which they incurred with a non-ICV supplier, but now they are rerouting it to an ICV supplier. So we'll see in both cases, there is a score improvement, but the cost incurred is totally different. So this is where most companies, or at least some businesses, get it wrong, because they assume that ICV improvement is always about more spending. But actually, it's more about better structuring and then more spending. Hence, the point here is that not all ICV points cost the same. Now, having said that, if we rank the major levers, so this is a cost per point ranking. Here we are trying to rank the major levers from the cheapest to the most expensive. This would be the rank. At the top, we have capturing already eligible costs. Okay, so these are the costs that you have already incurred as part of your business. It forms part of your financials, but not captured or considered for ICV purpose. I'll give you some examples to make it clear. One would be, like we earlier said, cost of Emiratis that are already on your payroll, but not identified and segregated from expats and hence not considered for ICV purpose. And when I say Emirati cost, it could also include employer's pension contribution or external training provided to Emiratis. If any of these are not segregated or identified for ICV purpose, there is a lever there. Another point would be export bonus. See, a case that we often see is that companies who export goods with value addition, they would sometimes have a lack of adequate documentation, such as certificate of origin or customs document. Due to this, those companies will not be able to claim the score for exports, though they have actually generated this qualifying revenue from outside the country. So capturing that or maintaining that documentation would be another lever. Another example would be capturing eligible operating costs such as water and electricity, government fees, rent, because such expenses have a standard ICV rate of 80% or more. So these are all necessary everyday expense that all businesses incur, but failing to capture it, if you have failed to capture it, going back to it will be definitely a cost-effective lever to improve your ICV score. Similarly, many times we see that expenses are recorded under broad categories. That is, you have to record expenses on a supplier-wise basis to enable accurate reporting under the third-party spend. This is to ensure that you can provide a detailed supplier-wise breakdown when required. Because failure to do this may result in UAE incurred cost being finally classified as an outside UAE cost or a disallowed cost, leading to a loss of eligible ICV benefit. So that is about capturing already eligible costs. Next is fixing your supplier structure or rerouting your existing spend, which is simply procuring your goods and services from suppliers having a comparatively higher ICV score instead of suppliers who do not have an ICV score. So we see in both these cases, the additional cost that is incurred is minimal or zero. And these are expenses that you regularly incur, but at the same time, you are guaranteed an upward shift to your score. Hence, these are quick wins. Next in ranking comes increase in genuine local procurement versus imports. So this is basically localization of procurement wherever possible. So procurement costs that you incur as imports impacts your ICV score negatively because the spend is outside UAE, and hence moving this purchase to UAE vendors wherever possible will improve your score by giving you at least 10% weightage for the cost incurred with them. So if you import, it will give you 0%, but if you purchase locally, you will get a minimum of 10% weightage. So here there would be a low to medium additional cost, but definitely the score would improve. The fourth lever in ranking is new Emirati hires. This could be considered as the next priority. While hiring new Emiratis, there is a median level of cost to be incurred, but this is a structural change for better scoring. As earlier said, it contributes towards TPS, the third-party spend, Emiratization, and ICV bonus with regards to headcount. Also, it meets the Emirati mandate. Next would be the expats. Now, from the point of view of ICV scoring, this would be of lower priority. However, optimizing your expat cost that you incur by routing all your salary payments through WPS and minimizing your cash payments and maintaining all the supporting documents will definitely help your score. And ranking 6th is new capital investment. This would be the lever that demands the largest spend or outlay because, yes, there can be an improvement in score in terms of ICV bonus and investment top-up. But if those investments are not a requirement or a necessity for your business purpose, it would be a very costly option just for ICV improvement. So that is why it is ranked 6th. Now, these are not all the possibilities to improve your score. There are other avenues as well, as discussed earlier, such as ISO certification, sustainability policies, ITTI, donations, to Saldukal Watan and government universities. But what we are trying to put across here is to help you evaluate the cost-benefit trade-off while trying to improve your score so that you take informed and strategic decisions. So you may assess which of these options are more relevant to your business and proceed accordingly to optimize your score. So based on the poll that we did earlier, like I said, what is surprising is the counterintuitive result. That is, the highest spending is many a times going into the lowest efficiency areas, while the cheaper points are left untouched. So the key message here is that most companies are already spending the money, but if planned better, they could reap much better benefits. Things like Emirati payroll, which is already paid, supplier spend, which is already happening, but not with high ICV suppliers, and export revenue, which is already there, but not claimed. These are points that are not properly captured. So it's not always a spending problem. It's a visibility and structuring problem because companies can achieve a higher score through better process management and not always by spending millions. So before spending additional money, always ensure that you have captured all available points based on cost that you have already incurred. So I would say the ICV efficient frontier or our recommendation is to fund in this order: capture, then reroute, and then build. So think of it in 3 steps. Okay, so the first is capture, where, like we discussed, you could recode your existing Emirati payroll or training cost or pension that is paid for them, bring it into the ICV schedule, then see that your overheads are booked under correct supplier ledgers so that you capture them, and see that your documentations are perfect so that you claim export revenue. These are examples of how you need to first capture and take credit what you've already spent. Here, the incremental cost is 0, but you gain additional points. Then you could move to rerouting or shifting your spend smarter. That would include either shifting your spend from non-ICV suppliers to ICV suppliers, or from imports to local UAE purchase wherever possible, or from free zone to mainland. Here again, there would be a marginal cost incurred, but you would get additional points as far as your ICV is concerned. And then comes build. So build comes only after you have captured and reroute. So then you think about investing or expanding and use this option after you have exhausted the first 2. So here it would include Emirati hires, asset investments if the business case justifies it, and investing in ISO certifications and sustainability policies. Here there would be a recurring or one-time cost, and still you would be getting additional points. The issue is, if you are jumping straight to step 3, then the inefficiency comes in. So if you follow this framework, it will help ensure that every additional dirham that you spend gives you the best possible score impact. With that, we come to our next poll. We have another poll for you. I would request all of you to kindly scan the QR code that you can see on the screen and put in your response. We just want to know from your side, have you ever checked your ICV supplier scores? Is it like, yes, you check it regularly, or you're unsure and maybe some are checked, or is it like, no, we have never checked it? Just to understand whether you're already doing it or currently where you stand there. So it's also just a minute you can take to ponder over it. Yes, we have the results coming where majority, 65% are unsure, only some may have been checked. And the rest, no, we have a good almost 30% saying, more than 30% saying that they have never checked it. And some suppliers, minority, around 14% are regularly checking their ICV scope. So I think this would be an eye-opener for your management and especially your procurement team, that ICV scoring should be a criteria while selecting your suppliers, because this will go a long way in improving your ICV score in a cost-effective manner. Thank you so much for participating in the poll. Let's move ahead. Okay, so here I would like to give you a real example. Okay, so this is a worked case where a company has improved their ICV score by 9 points without a huge cost outlay. Okay, so first, initially, I'll tell you initially how it was. This company is a mid-sized UAE trading company with an annual spend of 21 million. Initially, out of this 21 million, 5 million, 85 million expenses were recorded under broad categories without supplier details. And hence, of course, they could not be considered for ICV scoring. They were considered as outside UAE expenses. Another 12 million they spent with uncertified or foreign vendors, and a 1 million with ICV certified locals having an average ICV score of 20%. Also, if you look into their workforce, they had 100% expatriates, and no amount was allocated for Emirati talent. Now, to improve their score, what they did was, firstly, the 5 million expenses which were recorded not in supplier ledgers earlier, it was now assigned to supplier ledgers and hence included as UAE cost. So this alone gave them an additional 1.5 points with zero additional spend. Next thing they adopted to was, out of the 12 million which they spent with uncertified or foreign vendors, they rerouted 6 million to certified local suppliers having an ICV score of an average of 40%. And this brought in a shift of more than 5%, 5.46% to their ICV scoring. And then one mid-level expat vacancy was replaced with a Emirati hire. So here alone, they got more than 2% increase in the score. So in total, without introducing new capex, they have gained 9%. So first, what they did was they fixed how their costs were recorded, proper cost allocation, added additional points, and also they added an Emirati hire. In short, they optimized their existing cost for best benefits and did not spend millions additionally. Now, the reason behind this math is that procurement carries the heaviest weight, up to 50% in ICV. So simply running a vendor audit and mandating that procurement teams prioritize suppliers with a high ICV score acts as a massive lever. Because see, this money is already leaving the business, and resequencing it ensures that it buys both the service and the ICV points. Also, when it comes to Emirati hires, the timing is very important because the ICV formula looks at the headcount and the payroll during the audited financial year. So timing the hire and ensuring that they are registered with MOHRI and GPSSA correctly before the financial cutoff guarantees that these points are captured. So to achieve this, the same 9% increase, if they had tried to do it purely through investment or asset category, definitely this company would have had to invest a huge amount in new machinery to inflate their net book value. So unless necessary for business operations, buying physical assets impacts the cash flow, whereas resequencing your existing spend protects it. Yeah, so moving ahead, if based on the worked case that we just saw and the ranking of the different levers that we discussed, if you had just 3 actions to take from today, we would suggest first, fix your cost structure. That is especially your Emirati payroll, the training, the supplier expenses, so that you do not lose the score of what you're already spending. Second would be to review your suppliers, not just the cost, but the ICV score. Like mentioned in the previous slide, pull out your top vendors, go through their ICV scoring and reweight or restructure your cost incurred with them in such a way that you procure the most from your suppliers with higher ICV scores. So the cost incurred, the volume remains the same, but your score will improve. And then claim what you are already eligible for, like export benefits. Any company that exports goods or services with value addition are eligible for this, and make sure that if you're doing it, you claim it. So what we suggest is try incorporating these actions without new expenditure. For those of you who are already following it, please continue, but others could take an initiative. So here, if you see in the first step, it's the finance team that has to take the lead to probably work on the chart of accounts to capture the cost separately. While coming to supplier ICV audit, the procurement team can ensure that ICV score is an important criteria while selecting suppliers. So none of this needs a heavy budget, but it can significantly improve your score. Now, what we can get from this to wrap up, what I would like to say is, not all ICV points cost the same, and every ICV point has a definite cost. So approach ICV score improvement with that understanding in mind. Like we heard from the example, spending 500,000 on a new machinery or making some changes to your existing cost. Which would you do first? Which would you prioritize? Then most companies are overpaying before exhausting the low-cost levers. So make sure to exhaust the cheaper levers and then go for the high ones. Very importantly, most times your process improvement matters more than the spending. So ICV optimization is mostly or 80% about process change and then 20% about new investment. And here, as mentioned earlier, the finance and the procurement team needs to work together so that you deliver the fastest return on investment. And of course, the important order, which we discussed earlier, capture, reroute, and then build. So follow the sequence consistently in your framework, and that is how you would be able to optimize your ICV efficiently. So if you would remember one thing from today, let it be this, that ICV is not always about spending more, but it's also about restructuring better and then spending. So as mentioned initially, we would like to offer a complimentary ICV score health check for 3 selected suppliers. So if you're interested, please scan the QR code on the screen now, and you can book your slot. So we are offering a structured review here, where we will be helping you identify missed opportunities or where you're losing points, what you could fix immediately, and what actions to take next. So if you're interested, please scan the QR code that is visible on the screen and give us your details. We will be reaching out back to you. Also, while you do that, like you were informed, we have a brief Q&A session. So now the floor is open for your questions. We would like to take your questions, and please feel free to post your ICV related queries, if any, in the chat box. We will be happy to address them. And for questions that we are unable to take up now, we will be getting back to you on email. If you have any ICV related queries, feel free to post your questions in the chat box. Please post your questions in the chat box and we can take it from there. Okay, so we have received one question is we often struggle to get hold of our suppliers' ICV certificates. Is there a central register of companies? Is there an easy way to get hold of certificates? Okay, so the normal way of getting hold of certificates is definitely approaching the supplier. But on the ministry's website, on the website of Ministry and Ministry of Industry and Advanced Technology, you will be able to check if your supplier has a valid ICV score as of now. That is possible. But then to get the certificate, you will have to definitely approach the company because it is their information, it is their property. So you'll have to approach the company. Okay, there's a question regarding free zone companies. So as of now, as per the current ICV guidelines, there is a difference of between how score is calculated for free zone companies and mainland companies. Main thing is in the investments. While like I was saying, mainland companies get 10% and then an additional 15% top up and a bonus under investments. For free zone companies, there is no scoring as of now for investments. Also, for free zone companies, export bonus is not available. So these are the two differences for score calculation between free zone companies and mainland companies, because as per the current guidelines, free zone companies are considered as outside UAE companies for ICV purpose. So if you suppose you are a mainland company, if you purchase goods from a free zone company, it is considered as an outside UAE purchase, which is why I had mentioned where possible, try to procure from mainland companies. Okay, in case of a service provider, what would be the proof of supply? There is no shipping documents. Yeah, so I think that question is about exports. So for exports, if you're exporting services, you will not require the certificate of origin or customs document. That requirement, which I was mentioning, like I said, it is in the case of exporting goods. If you're exporting services, the invoice, the payment proof of money coming from outside the country to within UAE, and the agreement would suffice. There would be no shipping documents required. Yeah, revenue generated from importing and exporting goods in the same condition without value addition, it will not be considered for export. So we have a question whether such revenue without value addition will be considered under exports. Clearly, the ministry has mentioned that if you are exporting something, a good, without value addition, that is, you are importing and just exporting it, there is no value addition in the country, it will not be considered as export bonus, or you will not get the benefit under the ICV bonus. So very clearly, there should be value addition for exports to qualify for the ICV bonus. Okay. Yeah, there's another question on recoding Emirati payroll. So here, what we mean is, we have seen companies, they have Emiratis on their payroll. They are paying to their Emirati staff through WPS, but sometimes they do not segregate this cost and provide for ICV score calculation purpose. So if not separated, this will automatically be considered under expat cost. And the scoring that you get when this comes under expats is lower. You are losing out on the Emiratization benefit when you don't classify it properly. So ensuring that your finance team is segregating and recording these costs separately, and you have it handy to provide it to us by identifying which are the salaries from the WPS file paid to Emiratis, will help you claim the Emirati cost. Where can we find the laws and regulations related to ICV, and which is the official website? Like I said, ICV is governed by the Ministry of Industry and Advanced Technology, MOIAT in short. If you go to the website of this ministry, you will be able to find a supplier guidelines for ICV certification. It is a public document and it mentions clearly all these things like how the scoring is, what documents would be not exactly what documents would be required, but what are the criterias to be considered for ICV certification. Regarding the documentation part, the ministry informs the certifying bodies through the AUP that they provide. Okay, does investing in technology and AI, which improves productivity but reduces headcount, negatively affect the ICV score? Again, it depends on whether the change comes about in expats or Emiratis. Like we said, as per the current score framework, the impact, if it is impacting the Emiratization or the Emirati workforce, definitely the impact would be greater. But if it is under expats, the impact would be slightly lower. Okay, companies, we have a question where if the company name is slightly different between the ICV certificate and the invoice, can we claim? So as per the guidelines of the ministry and as per the AUP, when you claim a particular expense, the name in the invoice and the name in the ICV certificate of that supplier should be exactly the same. And that is when you're able to claim. Again, this would come under the capture stage that we mentioned. This is one thing that we could bring up there. Make sure that your documentation is perfect. When you get your invoices, the names are correct so that you are able to claim the ICV scores for the cost which you have already incurred. If you see there is a difference, immediately you can approach the supplier and ask them to correct it or provide a clarification, because at a later date, when you do the ICV certification, it might be difficult to go back and get it done. Now, there are instances where if the change is because of some genuine reason, we can get an approval from the ministry and include it. But mostly, speaking generally, the name on the invoice and the ICV certificate should be the same. Okay, can we claim expenses on government issued invoices but paid through company issued credit card to employee or PRO? So if government expenses are paid directly by the company, even if it is through company credit card, you can claim it. Where you cannot claim it as a government expense is if you are making the payment through typing centers. So if you make the payment through typing centers, the typing center becomes the supplier and it will be considered as a local UAE non-ICV supplier. But if it is a direct expense to the government, you get the 100% weightage for that cost since it is a government expense. Yeah, so I think we were able to answer most of the questions. In case I've missed out some, we'll definitely get back to you on email. Thank you so much for your for the questions and for the interest. Now I would like to hand it over back to Teresa.
Thank you, Serin. And once again, I would like to thank both our speakers, Mr. Gireesh and Ms. Serin, for this wonderful session and their insights on ICB. So I think, and I would also like to thank everyone here for participating in the questionnaire. And as Ms. Serin mentioned, if there's any further questions, they would be definitely connecting you via the email. So thank you so much for joining and for this wonderful session. And thank you once again. Thank you so much. Just repeating that if you have any further queries, our team would be connecting you, or you can just definitely connect us via email as well. So, yeah, thank you.
Serin, just to go back to the